Good morning, everybody. This is Dee Dee with Power of Three Trading. Thank you for joining. I'm not here just to teach you the strat, but teach you how to execute using the strat techniques. If you have more questions regarding the strat, please reach out to my guy, Rob Smith, at Smith's in the Black channel, Robert in the Black on Twitter, or at sepiagroup.com. Okay, so yesterday, Monday, after the jobs report, and so let's look at what the market did. As soon as I can get, there you go. I'm going to reshare this other screen here. Just give me a second because I'm working on two monitors. There we go. All right. So start with Qs. Broader market. There we go. So what we talked about was, can you guys see my charts? So what we talked about was the Qs and our new 3-day flip yesterday, and looking at an opportunity to trade this market. Okay, thank you. And we had, when the market traded up, right? So right at the beginning of the month, so you can see we're green on the month. This was July 1st, went inside, then we saw our two up, the outside bar to the upside, two up, two up, two up. And then we have a new 3-day pattern forming. I love the 3-day charts. There's something about those threes. When I see the market going straight up, I'm looking for a pause or potential reversal. And so when we have the market two up, two up, two up, 3-day pattern, what we knew was if price was going to go higher, right? Obviously it had to go two up again on the 3-day chart. Price was gapping down at the open though, and you can see that no can do on a continuation to the upside. It reversed the day, and we actually charted it after recording yesterday, so I'll show you that. And then this was our 2-day chart. Today starts a new 2-day pattern. So we kind of have the shooter here to the downside. And so I'm looking for continued downside pressure on the broader market. So we'll see what happens. Today is day one of our 2-day chart with the continuation on the 3-day. So we'll see. So we're red here, red on the day, and of course we're red on the week. And we had a 3-2 up on the weekly. So we'll see if how much pressure the market feels. Not sure. I did not check my economic calendar today to see if there was any news coming out. We'll look at that. All right, and so let's take a look at the Qs from our chart perspective and the difficulty it was getting into this trade at the open. If you're following my wait to the 15-minute close rule, I love when this happens, and then I hate when this happens. And so I'll show this to you, and I'll show you what I did on Tesla because it traded exactly the same. All right, so we drew our broadening formations. Let's kind of look at that. So we had this outside bar here. We drew our broadening formation. We knew if price was going to trade lower, it had to take the low of the day. But we also were looking at going short right here below this range, right? We were going to go long if it traded above this level, meaning it would have gone two up on a 3-day chart. That would have been a risky trade. I would have been prepared for if it had gone long for a reversal back inside, and we'll look to reverse that because you'd have to have some good momentum for the market to continue in that pattern, but it didn't. And so we said we were going to go short below here. So we drew this broadening formation from here to the low of this, to the high of this range, because we did not have another candle, a 2-down candle in this range. So we used the high of this candle here. All right, so short below this range, right? And then we had a target here, this outside bar. We just drew that to this two up bar here. And then another target here with this 3-2 up bar here. All right, so let's see what that looked like. And we'll replay it on this, blow this up so you can see here. I'm going to do the replay on this because it gapped, but it was still inside. And that's what I want you to understand. So there's a difference between a gapper that trades gaps outside the range, like a kicker, and a gapper that just gaps below or above the close. And that's what we saw here with the Qs. It gapped below the previous day close, but it stayed inside for just a bit, right? Because remember, this is the low of the day. All right, so the low was 291.12. So it gaps down, hits this broadening formation that we drew off of our 90. All right, and then it holds this, but it creates this little doji. And I hate when it does that. I prefer to see a 2-2-2, meaning two up, 2 down continuation, then I would have entered there, but that's not what happened. We have a 2 down, a 2 down. Now it hits the low of the day. Now we have a decision to make. If you were trading before the 15-minute flip, your risk is higher, right? Because you don't want to hold this all the way back up here if it doesn't come in. My experience has taught me that sometimes it works, sometimes it doesn't. So I just started staying away from it. And so unfortunately, I didn't get the look that I wanted on the Qs, and you can see exactly how it traded. It went 2 down. But if you were looking at this on a, well, let's just flip over on a 1-minute chart, you can see where your TTO came, that inside bar of that 1 minute. I can't trade that, guys. But if you can, then you would have had an opportunity and you could have taken this short here in this range, right at 934. That was the 3-minute flip, right here in this range. But what it did was it traded down, hit our level, broke the prior day's low, continued. And I'm like, come on, TTO, TTO, TTO. It did not give it to me. You had this little inside bar here. It came down, traded up, and then came back down. I did not trade the Qs. I was not happy with that look, but you could have made a little profit there. It didn't hold quite, and came back in. And so if you had taken this trade and held this below this level, and then price started coming back up, because now you have this 2 down, this is your first try. You had an inside bar here and then another 2 down. This is continuation pattern. This did not reverse. It went 2 down, inside, 2 back down, even though it was green, 2 back down on the 3-minute. So it didn't reverse. The 3 continuation to the downside, it finally reversed here. So this was not, again, hold on, what time was this? Here was, okay, so here was your 18-minute flip. This is your 18-minute flip. And so you could have taken that there, given that this was a TTO on the 1 or 2 minute, but that was short-lived. You would have had to gotten out. And I will show you that's exactly what I did on Tesla and made a small profit. The problem with the Qs, though, it didn't really give us another re-entry. I didn't like it. And as you can see, another 2-2 here inside and back to the upside. And now you're in a tight range. I'm going to pause it here so you can see what that looked like on the 18-minute, because you're in this range here, guys. Once it went 2 up, you're still big bright red on the 90. This is your 1024 heading into your 90-minute flip. I'm sorry, your 60-minute flip. And then you had another opportunity here to make a small profit, and then it went right back inside. So I did not care for the trade at all. And so I did not trade it. Let me show you a small entry, because again, I'm looking for the short side of this trade. This is the last 18 minutes of your 90-minute candle. And so I would have, if I had traded it, I would have liked to have gotten in right here in this 18-minute flip. So this was at 1042, right? So this is your 18-minute flip. Because remember, we talked about this yesterday and got really good feedback for that video. Thank you. We talked about this yesterday. On the flip, you're looking for entries, whether it's the 15-minute, the 18-minute, but on every flip, because we want price to go next two, next two, next two, next two, next two. Oh, Q's didn't do that. It went next two, up, right? 2 down, 2 down, 2 up. This is not where we want to spend our time. We like to spend our time, and I'll show you on this 90-minute flip here, was the best trade of the day. I didn't trade it, but this would have been the best trade of the day. 2 down, 2 down, 2 down, 2 down. We need continuation patterns, right? To continue to make money in this market. When price starts flipping to the upside on our 15, 18-minute patterns and get stuck in that range, this is when you're going to get chopped up. So we don't want to trade in here. We want to trade on the flips. So 90, 60, where 15, 18 continues 2 down in succession. And so if you're scalping in here, you wait for that 15, 18-minute flip. So this was 1042, this is 1045. You have an inside bar back into continuity with the daily, right? 60, 90. So now you're red. Let's see, you're not red on the 60. It opened way down here on the 60, but you are red on the 90 because this 90 is still in control. So you take that inside bar there. This will be, so this is your broadening formation. So this is going to be your stop loss. You have this inside bar on this flip here, and you're still below -100. So you could have taken that. I would not have tried to trade this to the upside because I'm looking to short this market. So I don't care what's happening here. I'm waiting for my next entry to go short. And this was the next opportunity on the 18-minute flip. So on this flip, it went green in that first 3 minutes. On this flip, 1024, green. So I'm not looking to short here. This first 18-minute flip, first 3, it went red. Inside, take that short. And let's see how that plays out. But you can see here later on, that flip did not, so still holding. So you could have held this because it didn't stop you out. Got this little 3 here, outside bar, and then it trades lower back down into this range, but it didn't last. Didn't last, guys. You have to get back out of this trade. It came back down to this next 18-minute flip, which is the top of the hour. You're inside 90. We do absolutely nothing in here unless you are really good at trading the shorter time frames, and you're just doing some quick scalps in and out because nothing else matters. All these broadening formations, remember, If you're scalping these trades for these quick in and out moves off of a 322 or 212, 312 on a shorter time frame, then you have to use that time frame that you're trading to get in and out of those trades. Once you get stuck in here, you're just getting chopped up. So I prefer not to trade these at all. But if that's your game, you can do it. But I would look for a 322 on a 3-minute chart to try to trade a scalp a trade that's inside. But I would not trade it at all. So now we wait for our 90-minute flip, which is at 12:30, to see if there's an other opportunity. Because again, and for me anyway, the 90 is my enforced candle. There may be an opportunity for me to go long here. I actually just drew this line this morning when I was looking at it, but I didn't trade that. So let me delete that line. So here's our flip, guys. Ask yourself, is there an opportunity to enter this trade? Now, if you're looking at the 18-minute, this is still in what I call my red zone. So I'm probably not going to trade this. Even though this looks like it wants to go to the upside, it is now crossed below 0 on 90. So in my mind, I'm thinking this could be a very choppy move to the upside, because remember, CCI is helping us with momentum. Price discovery will continue all day as long as the market's open. But whether or not you get your continuous 222 patterns will be determined based on, buyers and sellers. And this is where CCI helps me with those moves. And you can see you really didn't get that until really the 1 o'clock hour, as you had this outside bar in the 18. So I wouldn't have traded that. I would have waited, just because I didn't like the move, like what I saw in CCI, because remember, you're still bright red on the day. This is trying to come back inside this range, and then I wait for my 2 o'clock. Let me pause it here. So now we have our 2 o'clock flip here, right? This is a great reversal pattern, nice and green here, right at the last 18 minutes of the 90-minute candle. All right, reversal signal. This is the last 18 minutes in that 90-minute candle. And so I am now looking at price action. So this is at 142 at this outside bar. You got the 3, 1, 2 up, 2 up, close down, and you can see how CCI is now coming back in. And so I'm not looking to trade this to the upside here. I'm waiting for my 90-minute flip. So I'm not going to wait for the last 18 minutes in the 90-minute candle to enter a trade, right? So Rob will tell you when things happen matter. And so we're not going to wait here and to take that trade. We're going to take that trade after the 90-minute flip. So just think in terms of your flips. Is it the 60-minute flip or the 90-minute flip? As long as you are 2-2 continuation, you can hold on the 15 and 18, but as soon as price action reverses that 15 or that 18, let's see what that looks like on the 15-minute chart. Yeah, so you see here on the 1 o'clock, yeah. So you can see price crosses up. This is where you could see potential entry here at the 1 o'clock hour instead of 12:30. You see all these dojis, and that was actually the line that I had drawn. Was find my lines here. That line I had drawn was like that. The reason I did that is like, okay, so if I were going to enter this trade, I would have looked at the highest 2 points in this 90-minute candle, the 2 ups, right? High as the 2 ups, because remember, this is a 2 down. So I'm looking at the high of those 2 ups in that 90-minute range, and I'm drawing that broadening formation down, and that's where I would have looked for an entry as it crossed back above here, because I would have used that as my stop loss. But anyway, so that's why I had drawn that line earlier if I were doing it. But in this case, you can see price, the last 15 minutes of that 90-minute candle start to create a doji and close inside. You have to get out of that if you were long here. If you were long here and you see price action crossing back below 100, get out of that. It comes back up. Don't be psyched out, right? And try to get back in. This trade is over. And then you see your 90-minute flip here at 2 o'clock. You have this doji here. You have a 2 up, 2 down, and this is your flip. I would have taken that off this doji, 2, 2. And yeah, I'm looking at this is my range. Remember we talked about this. Have you gotten to an exhaustion yet on your shorter time frame? And you can see it triangled out here, but we would have gotten in up here, so we're still good. This would have been our stop. And so those triangles are going to happen, guys. You know, there's absolutely nothing we can do about it. That's how price discovery works. So the idea here is, though, that you get into a profitable situation. So when it does TTO, it doesn't take out your stop. And then you hold this because it took out this range, which would have been my focus. It did take out a range TTO, but it held below our trend line, right? Because we had drawn this from early in the day. And now you have a profitable situation. And so really on the cues, again, this is the patience that you have to have when you're trading. You didn't get the setup at the open, right? We didn't get the setup we liked at the open. And so you have to be patient enough to get it coming on a reversal after it, because it reversed here on the 90 and then it reversed again. And the setups will come, they just may not come when you think they're going to come. And that's what's so frustrating when you're trying to trade this market. But if you're patient enough, you can wait and see what's going to happen. And I tell you, if nothing else, you won't lose a ton of money trading this market. And when the market is just right, you'll make a ton. And when it's not so right, you won't lose much, or you can make a little. Okay. So what are our options? Make a little, lose a little, make a lot. We don't lose a lot. That's not an option. Okay. All right. So that was the cues. Now, let me just show you Tesla real quick because it looked very similar. The only difference was I was able to get into Tesla because it can, look at it, straight it up. So I may lose on my short. I'm holding Tesla short here today, so it may pop up as a loss. We'll see what happens. So I had, you could see Tesla traded very similar with the cues, right? Created this little outside doji here, traded down, 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 down. I didn't get my 2 up until here, right? So this was, and I'll just go back to my 18-minute. So this was at the top of the hour before I got my triangle. And so not exactly thrilled. So I took this short right here, made a small profit because then it went inside. And I said, nope, not holding this, because CCI started to come back up. So I exited for a small profit. And then here, and you can see it traded inside, right? I don't want to be inside these 18-minute, 15-minute ranges, traded inside again. And then here, I got my flip. I didn't get the best entry. I didn't enter until here. I waited, but here was my flip right here. I had this 2 up right here, 2 down. I should have entered it right here. I would have had a better risk reward with this doji here, because this was my 18-minute flip. I chose to hold it. until it got here, crossed back below zero, and I was able to catch this move down here. And that was actually a nice move for Tesla, right? So 720, the low was about 708. But unfortunately, I let it climb back up. I was trying, because I was expecting it to TTO, and as it TTO'd, I lost some profit. Then it came right back down, and I did not get back into the trade immediately. And then I was telling the guys offline, I actually did get back in, but not with intent, because in my small account anyway, I didn't have the settled cash, and so I got a warning about it, and so I ended up holding it through all of this, and then it came right back down because I looked at the longer time frame, and I said, yeah, I think I'm gonna hold it, and because I saw my outside, my 2-up shooter here on the 2-day, I was like, you know what, tomorrow's a new 2-day flip. I'm going to hold this and see if we can get this move to the downside. But you can see in pre-market, it's now trading up. We still have another hour and 40 minutes, but it's been trading up and down. So we'll see if price continues to the downside, but I'm actually holding a 210 put on that. But if I ended up with a loss on today, that'll be the reason, because I'm holding this guy in my small account. Okay, so not a whole lot going on the screener today. Looks like energy prices are coming down. And when I look at that and I see the broader market, it was trading, it was trading down. Looks like the SPY is still trading down. Then I'm looking to see if the market continues to the downside. That's what we'll be looking for. The SPY on the daily is trading back below this range. Looking at about, if it trades below 383, maybe it gets back down to 381, the high of this range, 381.98, so 382. So we'll see. This may be some congestion here, because it looks like it's trying to trade back inside June's the opening month open. So remember, this was our month open here, right? So we're green on the month. It's trying to come back inside this open. I don't know. It could just be one of those continuation patterns. And so what you'll look for in a continuation, something in like this, if this holds 382 holds, then you could see price go two down and 2 back up with a continuation to the upside. So we're looking to see if this 382 holds here. Okay. In the QQQ, similar. That's this range here. I'm going to draw this because this is this gap here. So I'd be looking to see if this guy holds 387. What's so low here? 387.50. I'm sorry, 287.50. If 287.50 holds, there's potential for price to continue to the upside. So we'll see what happens today. But if these levels break, 287.50 breaks, and 285.36, I'll be looking at this broadening formation here. And so what does that mean for my Tesla in the broader market? If those levels hold, then I may be punished here in my option, my short option. I was looking for it to take this range here, which is 696. So I'll be looking for price action to trade lower from yesterday's close to take out the 696. But if the 700 holds, then we could see price trade inside this range with the continuation to the upside. So careful with this market is really the message. I had something on my chart early, but there's no, there's really no movement here. DoorDash had gapped early, but it's not much of a gap right now. So I was going to trade that. I chart that. Let's see if we can. Let's see if we can short. Chart DoorDash. All right. Some old lines there. Let's remove those. So we have DoorDash was inside here, right? So we had this big move. It's all inside this range, guys. It may be a little tricky. Let's just see it on a daily. See this big, you got a couple big big bars here for DoorDash. This is a 10 point range. This is an 8-point range. And it's definitely more than what it normally moves. So it's got to get outside of this range here. You got a couple big mother bars. So that's what you see here. So it's trading in this range now, but let's see, it depends on whether or not right, broader market gives us any support here. But we want to trade this lower below this range here. So this is the low of the day. So I just drew that broad information back to this range. All right. I think that's, let's see, let's 70, 88, 70, 99. I was right the first time. All right, so that's lower. All right, so we know we need to get outside the day. All right. We know we have to get outside the days range. So that's this guy here. So that's high 74.59, 74.43. All right, so we know we need to get outside this range, but we have an inside bar here. We don't want to be in there. Then we have a 2-down bar, a 2-down bar, and a 2-down bar. So to trade that lower, we want to be below the low of the day. Here's not where we want to get stuck. All right, so because you have this outside bar here and you have this 2 up, you have this inside bar here and you have these 2 downs. I want to stay outside of this range unless price trades lower throughout the day and maybe a potential for it to trade higher with the 18-minute above 0. So we'll have to see if it gaps, if it trades lower and then reverses the day. That would be the only thing with the potential outside bar. But otherwise, I don't want to be in this range at the open. So if we can get price to trade, if price action trades lower, we want to short here below yesterday's low and potential long above this inside bar, right? We'll go, I'll look to go long above 73, right? All right, so now you have this range here. We have a 2 up bar here. So I would look for my first target because you have this 2 up bar here. So you're inside this outside bar. Remember, these are big outside bars here. This is especially the mother bar problems. So if it's coming back inside this range, guys, it's got to take out these highs. And this was an inside day, right? So this is an inside bar here. 1, 2, 3, 4, 5 to this inside candle. This is inside of this day. Okay, so I drew this broadening formation from these highs of this day. And so that's going to be my first target if price trades lower than yesterday's low. So that's a 2 up, 2 down, 2 down continuation. Okay, so this is a 2-2 continuation pattern, but this will be our first target. So we'll have to look for our signals in here but that says only $1 range. So it's not a big range. So I'm looking for that break. And then you have this outside, I'm sorry, this 2 down bar here and this outside bar here that looks fairly even. 68.18, 68.20. Okay, so we'll just draw that. That will be our next level. So once it takes, if price takes this level, then this will be our next target. Okay, so that's how we'll trade it. If price trades to continuation, this is our first target, this is our second target. So it needs to trade below yesterday's low. So below 70, 74. I'll call it 77. Short below 70, 50. All right, so below this range here, 70, 64. This is 70, 75. 70. All right, and with CCI below -100 on the 18-minute. Okay, and then we'll go long above this inside bar, which is, we'll say 73.10 with above plus 100 on the 18-minute. All right, so that's how I would look to trade DoorDash. So be careful with this. Not a lot of excuse me, not a lot of movement at the open. Let's see. Let me look at my economic calendar here. Not much going on. Fed speak later in the day. But other than that, I don't see much going on in terms of hate the pop-ups. I don't see much going on in terms of market. Headline news. So let's just wait and see how this market plays out. Yeah, I'm looking for the market to trade up at the open with the 2-2 continuation to the downside. That's my focus. Okay, so we'll wrap up with my scripture, Proverbs 21:5. The plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. So again, we're just not looking to be hasty. That's the message. You have to wait and see what you see on these patterns. You know, depending on what time frame you're choosing to trade, you want to wait and see. I just particularly prefer not to trade these moves to the upside when CCI does not give me confidence that the momentum is flipped. And so I just look for my shorts. And this crossed over here, but at 130, that was at the 130 4-hour flip. Still red. I'm waiting. Even at this, guys, this was a 2-2. Even if you waited, this is not where you, right here at up 115 when it crossed over. I'm waiting because this is a 2-2-2 continuation. I'd be looking for an inside bar or a 2-2 2-2-2 to get in, because the idea is you're trying to get in with the best risk reward possible. Okay. All right, so we'll wrap it up there. Thank you for joining, and I hope you guys have a great rest of your day. Take care, everybody.